what do we see from Lenovo Q1 24? You got what exactly as you would expect with, I don't know, a few head turns. So first of all, lousy PC market. SSG did well, right? ISG was a bit of a surprise, but was it really? So overall revenue off 23%. The personal systems group, right? IDG was off 28%. And as a percentage of revenue, if right, half of that revenue is off 28%. Even if you're up in certain areas, you're going to be off. So the company, right, not to put the best performing first, they always start with SSG now, which by the way I still think is awesome and risky, because it's just so new that they had double digit growth, 18%. They did a really good job, and as you would expect, right, we've seen a lot of these different types of metrics, very consistent metrics. First of all, the percentage year to date in managed services, 54% growth. But I think the one that still impresses me the most is that 50% of SSG revenue is not directly related to the hardware they sell, right? Because with hardware comes a lot of services, right? You plan, you install, you get rid of the equipment. Sometimes you'll do help desks, sometimes you'll do PC as a service. So that's the one that impresses me the most. So, TrueScale is a hardware related services business. So 50% of that, and that comes to managed services. And you're like, well, wait a second, isn't that like the land of GSI? What Lenovo has done is it has invested in areas that has you would expect them to have core competencies in, and which, by the way, like hybrid cloud and some of the industry verticals like manufacturing and retail. So it makes sense to me. They also operate very heavily in Southeast Asia. So again, good job. A lot of what we had seen prior, just a little bit more. So ISG, right? Data center and the data center edge, off 8%, top line. And the quote, and you and I are going to be talking to Kirk later in the day, I think. Sluggish infrastructure sector demand and slow platform transition. And it's interesting. A lot of ISG's business is dependent on the hyperscalers. And what we've seen is that, again, there's not always a direct correlation in the same quarter between the hardware folks and the hyperscalers in terms of their numbers, but the hyperscaler numbers are down, right? I think we saw AWS is 12% growth or something like that. And Azure, right, wasn't that impressive historically either as a percentage. And you and I talk law of large numbers, but I need to dig into this. I do have a hypothesis that says there's not enough GPUs to go around, and what's happening is NVIDIA is selling a bunch of GPUs and putting them into old servers or older servers. So you don't need a new server to do this. That's a hypothesis, and I'm sticking to it until somebody can prove me wrong. But hey, big bright spots, right? I mean, storage revenue more than doubled year over year. ThinkEdge, which, right, we talk about Web 4 and on the edge, smart manufacturing, smart retail, 9 consecutive quarters of growth. So let's move to IDG, which is personal systems. As I said before, revenue off 28%, which obviously impacted the entire company because it's 50% of its revenue, but also their profit margin was down, and it's gone from 7.5% a year ago, 7.4, 7.3, 6.7, down to 6.3%. And looks like there's inventory pressure and possibly also pricing, right? The stuff that people do to clear out inventory in the PC market is incredible. Like ISG, bright spots too. Record premium smartphone mix. Sometimes we forget that Motorola is the number three market share leader in the United States in smartphones, um, and they're up 8%, 8 points year to year. 10-year record activation. So all is not down. Some bright spots. That's all I got, buddy. What do you got for Lenovo?
Yeah, I mean, it was on the surface a bit of a tougher sled. After several quarters, it's been really easy, Pat, to sort of just say, PC is PC and everybody's off.
Yeah,
And but what the last several quarters for Lenovo have been is, oh, look at our huge growth in infrastructure, look at our huge growth in services. This quarter was a bit more modest. Services had a small growth. Infrastructure actually saw a pullback for the first time in several quarters. And I tend to be aligned with you. I think the purchase mix has shifted substantially from CPU to GPU in the data center, and I do think that next week we're going to get the real number, Pat, when we see what Nvidia after its massive guide last
what do you
quarter.
think, man? Up four, up five?
I think it's 4.5 plus up.
Okay.
And this goes back to just what I said. Like, I don't see why they would have guided 4 up to just barely make that. I think I think they had the orders in hand, if I'm being honest, at that time.
Yeah.
So, but Nvidia's kind of it gets to play God a little bit right now in terms of deciding who gets what, and then of course who's willing to be the highest bidder.
Yeah.
I can't wait to see the margins just as to what people were willing to pay to get the supply that was available. But yeah, back to Lenovo. So, the company is having to continue to strategically address the growth while having to play in this AI space. Its services was the most capable of doing that because it's able to focus on managed services. It's not as hardware dependent. It's got infrastructure that's already been stood up to support that, and then of course it's got soft services that don't require hardware. And so that team, and we did talk to the head of that business, Ken Wong, and there's confidence. It's going more vertical, more industry solution based. Companies investing big time in multiple years in AI to be a player in that space. And listen, for OEMs, it's going to be a challenge. It's as the AI experience moves to the application layer, the infrastructure providers. You mentioned this with Chuck and networking, and we'll mention this here. You got to have data, you got to have storage, you got to have compute, you got to have. And by the way, with inference, it's not going to be all GPU. Even though we like to make the GPU everything, there's still going to be demand for traditional acceleration on, CPU. Also, there's going to be a pretty big swing at some point to edge and devices where AI is going to have to happen on device. And that is something that I think Lenovo will be well positioned to deal with. So, I'm not going to say much about the device market, Pat. Let's just say, based on what I said in the last segment about Cisco and the overall macro, it's still murky. It's opaque to me, whether we're really out of it kind of felt for a while, everything started feeling frothy again. Felt like maybe we're going to have a soft landing. Every stock would start running up to almost near highs. We were almost back to the highs of 2021. And we got a bit of a gut reality check this quarter. Seeing the numbers from Cisco on infrastructure was promising for enterprise spend. Seeing some of the numbers here from Lenovo to me is indicative of it could be a supply issue. It could be a demand issue. That's not entirely clear on the PC side. I still think we're a couple quarters away from seeing, but I do think AI is going to create a new kind of product, new demand for a new profile. And then just doubling down on infrastructure. There were some bright spots. There were some good numbers in there. You mentioned this. And the company did announce it's the number 3 on infrastructure for AI now. That's what they're claiming. So strong there, and even still the number 1 on PC. So
Yes.
And with inventory now, so we see the tide turn. This could be a good thing for Lenovo. Not the easiest quarter for any CEO or for any leadership team to tell the market, but there's still a lot of good things happening there, and I do think the corner will be turned. Most likely not until really into probably first, second quarter of 24.